While on the topic of gold and silver, let's quickly summarize that area. I had a couple of charts related to the drawdowns from the peaks in the United States since 1970. There was a graph illustrating how the declines have increased, similar to the period from the 1970s to the 1980s when American treasuries became undesirable. Currently, you can see the movement in the sales direction of American treasuries, and nobody wants to hold onto them because they are becoming time bombs. On the other hand, the People's Bank of China continues to buy gold, and it has been doing so for the past 12 months without any pause. Another chart related to gold and silver reminded us that gold was once a currency itself, marked in the graph. It beautifully shows the comparison of America's monetary base with gold during the Great Rally in 1980. The chart illustrates how monetary expansion continued and how gold occasionally spiked above it, signaling times to sell gold. As long as gold continues to trade below that base, it remains an investment in the medium to long term. The upward direction seems evident in the long term. Let's quickly look at our charts. Gold experienced a pullback and relaxed to around 1930 levels. Before it surpasses the trend-following level at 1954, there is a possibility that the difficulty may continue a bit more. The 1916 trend-following level is crucial, and there is a 200-day moving average at that level. Despite the news of the potential downgrade of America's outlook, gold should ideally be positive, and we will see if it is impacted at the beginning of the week. At 1916, there is the 200-day moving average. I still believe that pullbacks to this range are buying opportunities, and these movements are indicative of a temporary horizontal band. Pullbacks are opportunities to buy, and for long-term players, I don't think they are considering selling at these levels. Silver has a similar picture, but a bit more problematic. It is 23.2 cents above the 200-day moving average, and the 200-week average is at 22.08. We are stuck within this band, breaking above, then falling back inside. In the medium to long term, nothing significant will happen until it breaks above 24, 25, or 40. When that happens, a significant move will start, especially for short-term players. However, I want to make it clear that without breaking above those levels, a substantial move won't initiate. But when it breaks, a significant move will begin for short-term players. The gold-silver ratio has been in a horizontal pattern for an extended period. Looking at the weekly chart, it is currently stuck and consolidating. Each movement around 87 unfortunately results in short-term selling. Therefore, it is not suitable for short-term play unless silver participates. It is still suitable for buying during pullbacks for trades in the medium to long term. However, pay attention to the levels I provided, as movements below them would excite me. Until then, I maintain my long-term optimistic, medium-term optimistic, and short-term cautious perspective for gold and silver. In wheat, we closed above the $560 trend following level and experienced a spike, but then retraced. As long as it stays above $560, my outlook remains positive. There is a good formation there, and I continue to hold my wheat through the ETF wheat on an intermediate to long-term basis. Oil took a significant hit. I had warned not to carry positions below the 200-day moving average, and we came down to below $80. Now, it's below $83. In the short term, my stance is as follows: below $83 is negative, and above is positive. However, oil is not suitable for trading on an intermediate to long-term basis. Its direction is highly erratic, influenced by insufficient demand, war news, or sudden economic downturns in China, causing fluctuations of up to 5%. Therefore, if you are a short-term player, keep an eye on oil. As for the intermediate to long-term, I don't trust it for either direction. Natural gas has returned to the 360s. This region is its support area. If it doesn't hold, things could get strange. However, the probability of holding is still high, and there is an increased likelihood of a bounce. I'm watching it closely. A move above $3.13 could turn the short-term trend positive. For uranium, URNM, as long as it stays above $45, the medium-term movement continues. It has moved into a sideways consolidation, as we mentioned earlier. Looking at the chart through the URM ETF, uranium has good upward potential. Now let's discuss how to trade commodities. Cocoa is a great example. After trading sideways in a triangle pattern for 5 years, it broke out. Cocoa is moving upward, reaching over $4,000 after breaking above $2,400. This is a great illustration of how to trade commodities in the medium to long term. The key is not to tie all your money to it but to allocate a small portion and hold it for the medium term. As long as it stays above $3,900, cocoa continues its upward trend. In summary, I've tried to provide a quick overview of various markets and potential trading opportunities. If you have specific questions or need more information on a particular market or asset, feel free to ask. Difficult times are complex times. Don't confuse your mind with other things. If you are looking at the short term, pay careful attention to the trend levels I provided. Let what I've explained linger in the back of your mind, but always remember, the medium to long-term picture is never influenced by short-term developments. They are already within the bigger picture. Keep focusing on the main picture, and I will continue to shed light on your path. Wishing you all very careful, profitable, and wonderful days ahead.